AI in finance, is it a threat to job or it's just a calculator?
The first thing everybody said is automate ho raha hai, jobs will go. The moment you have money in hand, you tend to spend, right? You should always be safe when you talk about the world of investments. At DSP, you're serving about 39 lakh investors. You see people making money and then you realize that it's very simple. Stick to the advice of an expert when it comes to something like this.
What's one luxury a student should never buy, maybe within the first 3 years?
Mostly the mistake most of them commit is you spend in cars and flashy holidays and all of that, which are essentially not required. First, create wealth in the form of financial assets, or it could be real estate or whatever.
China has identified the cause of the mysterious new virus. Coronavirus.
There are fears a rapidly spreading virus has reached Australia.
This is a rapidly emerging situation. There is not a cause for alarm.
These crisis situations never come announced, right? So, which means you should always plan for your resources.
Market crash ho gaya.
We see where the buyers are. We're just every day they're pounding it. My God.
Is the buy and hold for 20 years advice actually a scam in 2026 when the world changes every 6 months?
While the world is changing, the basic philosophy doesn't change. When it comes to investing, what is important is time in the market and not timing the market.
Best wealth advice you have ever heard, received or given? Is playing safe the biggest risk a student can take?
First and foremost is that you should start the habit of investment. That's more important. Number one. Number two, typically it is said that when you are young, right? After you pass out, you'll be like a 21-year-old, 22-year-old. Your risk-taking ability is higher. What I mean by that is you can have a higher allocation to equity as opposed to doing let's say a bank deposit. Unlike at a stage in life where you are about say 50, 60 or whatever, there the risk appetite should ideally go down, where you should be more on the fixed income side of the portfolio than on the equity side of portfolio. So to answer your question, start your investment journey early. Two, you could be high on equities generally to start with within the amount that you're planning to invest. And as you move along, you can keep changing your allocation towards equity depending on what are your life goals, essentially. But yes, you should start your investment journey early in life. The other way of looking at it is, the moment, there is this intangible return I always keep saying when you talk about money, which is the moment you have money in hand, you tend to spend, right? So you have, let's say you are starting with a salary of, I'm just putting a number, say 1 lakh rupee. Now what happens is the moment you have that money in hand, you tend to spend. But the moment that 1 lakh, out of that 1 lakh, you invest 50,000, you only have 50,000 in your hand. You will only spend 50,000. So if you see the fact that while that 50,000 is earning money which you have invested, that principle is also protected because you're not spend. Otherwise the urge to spend is high, right? So that is also a very important way of looking at it early in life.
So once these college students graduate and they get jobs, what's the most common financial trap they can fall into?
Financial trap. I think the biggest financial trap students will fall is easy returns, right? You hear that somebody is giving you X amount of return, Y amount of return, which may sound very insane, and you believe that, oh yes, I can make easy money, right? As they say, right, there's no free lunch in this world. In a similar manner, in the world of finance, there is no free money. Hence, it is very important to understand what you are investing into and then take that bet when you proceed. And like I said, you should always be safe when you talk about the world of investments. It's okay to earn a few bucks less rather than risking losing the entire principal. That should be the core thought process when it comes to the world of investment.
AI in finance, is it a threat to job or it's just a calculator to help you?
This is a very interesting question, and I must say that I believe it's not a threat to job. And the way I would like to articulate it is when computers as a should you say gadget or the tech tool that came into all our lives, the first thing everybody said is automate ho raha hai, jobs will go. at each point in time over the last 3 to 4 decades, there was some or the other automation happening in each field. And there was always a threat that with this automation or with this kind of advancement, jobs will be lost. But if you actually see, that's not been the case. I think these are tools that help you to do the job better and more importantly, do it at scale, right? If I had to give my field of finance and accounts, right? Like when I started my articleship, there is a concept called articleship that we have to do when we pursue our CA. It's a 3-year training internship essentially that we have to do. I've written accounting with my hand in a book. Okay. Imagine you're talking about large companies, right? Infosys, TCS, and so on and so forth. Imagine they have to write it with hand. Is it really possible? How many people will have to be employed to do all of that? Today, technology has helped reach that scale, yet at the same time, employment has also been provided. That's the benefit of this. And I'm sure AI is going to be just one of those added tool to take it to the next level. And also maybe today, if 4 years ago, the scale was one, we are at maybe, 1000x at scale. AI is going to probably help us take it to 10,000x or maybe a lakh x. That's how I see it.
AI would be changing how we invest, or we would rather stick to the old methods?
No, AI will certainly change the way it invests in the sense that it is aiding you in the decision making. So in the case of the world of investments, right, or fund management, certainly AI is aiding how some of these decision making, it will help in the decision making in terms of the data crunching in the form of doing a lot of analysis and all. It's certainly helping. In fact, AI is actually helping in almost all the fields and hence equally in the field of investment also.
So you have been with DSP since more than 21 years. So now it's an era where people don't stay at a company for more than 5 to 10 years. So what made you stay at DSP for so long?
That's a great question. In fact, when I joined this company, even I never knew that I'll spend so many years here, especially with the background that I came in my previous 2 organizations, which was extremely short. But essentially, it is the principles, the value system that plays a lot of role. The kind of opportunity that I've kept on getting, the kind of, should I say, liberty and authority, responsibility to do a certain job. These are very important for me to spend so much time in the firm, and thoroughly enjoyed my time for almost 21 years now. And that's very important, right? Early in your life, most of us may make a mistake of what you call skipping jobs for better pay, which I would not say whether it's a good idea or a bad idea, but I think what is very important also is to focus on what is the kind of organization work profile you are getting. Focus on that also. Are you learning? Because it is like in the context like buying a stock, right? Whether you are betting on a stock to make sure that over the next 5-10 years you make good amount of return out of that stock. Somewhere I will put that in career. You should look at the role that you're getting, the organization that you are, what is the growth path that you're getting, and are you learning? Are you gaining knowledge? That's very important.
So you said the values are DSP attracted you. So what are those core values at DSP?
So basically we are managing people's money, right? So we are in the business of fiduciary. And when we talk about that, we always keep our investors first. In fact, one of our taglines is also saying invest for good. So that is one of the most important aspects that we are here to, serving investors, keeping them at the forefront at whatever we do. Within that, we have our own values like spirituality. Whatever we do, we should be spiritual in our thoughts, in our minds, to conduct ourselves. Integrity, so much important. In every action, we should have integrity. And of course, we have to keep the community. Since we are serving investors, community is such an important aspect, right? We are serving a larger community. We are almost serving about, at DSP, we are serving about 38-39 lakh investors who are there with us. And then, of course, automation and tech forward is also one of our core values, because anything and everything that we do, keeping automation and technology at the forefront, because at the end of the day, that is also changing very rapidly, right? So by the time you are digesting something, that is already something which is changing before you could adopt it. So your change to those kind of adoption is so very important. So you have to be extremely nimble when it comes to technology. So these are some of the important value systems that we have.
So when quants and HFT systems drive most financial decisions today, where does a normal person still have an advantage?
So first and foremost, cons and HFTs are essentially driven by people who have knowledge of that and they have that kind of systems. Comparing that to a normal person, first and foremost, you should always stick to the advice of an expert when it comes to something like this. And mostly the HFTs and all of that is something it's very, very much what you call short-term trading and short-term punting kind of a thing. That is something, at least to two parts to this. Generally, it all depends on individuals whether they want to go that way or not. But to you all who are in college and want to pass out and make your career in few years down the line, I wouldn't suggest that, simply because what happens is the grass is always green on the other side, right? You see people making money and then you realize, "Arey, ye to bahut simple hai. Why can't I do that?" But it is not as simple as it appears. So better not to burn your hands and be very, what you call, cautious about some of these things. And like I said, all of these things, one should understand what the whole thing is all about and then do, rather than just jump into it just because somebody else is doing.
Wonderful, sir. So if a student from SPCE, if a college student wants to work at a top fund like DSP, but they aren't a CA or MBA pass, what one skill should they master which would get your attention?
In fact, even in our fund management, we have a lot of people who are from the engineering background, because there is also a combination of people from engineering, then later on doing, let's say, an MBA from an IIM or any other university, because they are a research specialist for tracking a certain sector. So when we are talking about somebody tracking an IT sector, which means and somebody who's an engineer in, say, computer science, it's an added advantage. After that, when they do an MBA, they are able to marry the technical expertise that they have learned in their engineering to the world of finance, because they are also an MBA, so they understand some basic concepts of finance, and on the basis of which they are able to research companies and bring out their what you call research note as to what is their view on that company. So when we talk about finance school, especially the fund management, I don't think it is restricted only to CAs or MBAs, certainly not. That could be fields like operations, where mostly it could be the finance people. But when you talk about the investment and the risk, what you call teams, they are a combination of, some are chartered accountants or MBA, some are engineers and MBA. So there is obviously a combination of that. So yes, in finance field also there are engineers who can make it big, actually, not just make it, but make it big. Typically, I would suggest that when you're looking at a world of finance, pass out as an engineer, try and do some finance courses. There are a host of finance courses. MBA is just one of them, but there are a lot of financial courses that are available. CFA is another course that is available. So when you do that, you are increasing your chances of making a cut in a mutual fund or an asset management or in the world of finance. By only doing engineering, the probability reduces. I will not say there is no chance, but the probability reduces, because at the end of the day, you have to understand finance. It's not just about technical, right? You are not going to build that a car, but you have to analyze a company that builds a car. There is a difference. So when you are analyzing the company building a car, you will have a technical background, what goes into the car and the specifics and the technology of that. But at the end of the day, you are here to suggest to your fund manager whether to invest in that or not, whether they'll make money or not. And that can only come when you also have a knowledge of finance.
So, sir, we are at SP, and many of the students will start with high-paying salaries. So, but they die broke in spirit, definitely, with EMIs. So, what's one luxury a student should never buy, maybe within their first 3 years?
Okay, let me make take my example, right? So I come from a very humble background. What I mean by that is obviously parents were simple, no big financial legacy behind. So as I say, self-made person, right? So the first and foremost thing that I did is any investment that I did only in appreciating assets. And once the appreciating assets, I have done my investment is where I started investing in depreciating assets. Let me just explain this further. So I started my journey. The first thing that I did within 6 months or 1 year of my earning is that I bought a flat, a small flat. At that point in time, a 1 BHK. Along the way, over a period of time, then I bought a bigger flat. And once I did that is when I bought my first car. Again, that too a second-hand car. Because mostly what the mistake most of them commit is you spend in cars and, flashy holidays and all of that, which are essentially not required. First, create wealth in the form of financial assets, or it could be real estate or whatever. Once you do that is where you can get into these luxuries, as you rightly pointed out, which could be car, which could be foreign holidays, and so on and so forth.
So we have talked a lot about earnings and savings. But what is one thing that a 20-year-old should definitely spend money on? Or what do you regret not spending money on in early days?
You should certainly spend money on gaining knowledge, which is invest in education, higher studies, and whatever it takes to do that. Because knowledge is something that will never go a waste. You gain knowledge and that will always be useful in all walks of life for you. And what happens is early in your life, you are very, raw when it comes to educational aspirations. You want to go up in life. You people are in this SPCE college. I'm sure most of you either want to pursue an MBA or probably an MS in an overseas university. That should always be pursued because that's going to pay you a lot. And more importantly, you get exposed to a network of like-minded students, sharp students, brilliant and smart set of students. And that actually has a lot of rub-off effect in terms of how you are and how you get shaped.
There's a famous saying that the poor work for money and the rich make the money work for them. So, is there a difference between how a middle-class family handles their taxes and how a high net worth income person will handle their tax planning? Is there a secret playbook they use?
Quite honestly, there's no secret playbook. When you talk about middle class, essentially the resources are limited, right? When we talk about, again, middle class, it's mostly salaried people. Now, when it is salary, your avenues to tax saving are limited or tax planning are limited to the extent what is allowed under law. But when we talk about business, the law is vast. There are ways and means in which you can structure your business, structure your tax planning and all of that. So, to your original point of the rich versus poor, the fact also remains you kind of answered your own question because the rich already have the resources, right? So which means they are in a position that the financial resources already is there. They're in a better position to, if the risk aspect is taken care of, they are in a position to build onto that and create wealth and fortune for themselves.
So the ultra-rich people use a strategy called as buy, borrow and die. They buy the assets, borrow them against to live a luxurious life, and they never sell. So as a CFO of a massive fund, do you think this is a genius financial move or just a legal loophole that can be breaking the system?
Quite honestly, not. Because first and foremost, if you are borrowing something, you're supposed to give what they say as collateral, right? Any financial institution is not going to lend you money without any kind of collateral. Collateral could be a house, collateral could be your gold, collateral could be some investment certificates. It could be various forms and manner. So there is no as such a legal loophole that I see. Principally speaking, of course, there are people who may take advantage of some regulatory loophole that is available in the system and then try to circumvent it. But in a generic manner, there is no loophole because I'm assuming your question is very generic in nature. In fact, even in our own individual lives, when you see, we all, a classic example of we borrow and buy is house. Mostly, about, if I have to just put it in number terms, 80 to 90% of us buy house by borrowing it from the bank. So if you're buying a house worth, let's say, 1 crore, principally you're supposed to put only 15-20% upfront, and the balance is what the bank gives you. So effectively, you bought a house worth 1 crore with only 15 lakh rupees, which is nothing else but you have leverage, you have borrowed to buy that asset, right? But that asset, generally speaking, is appreciating asset, and that is how you create wealth for yourself. You are able to repay in the form of EMI. And of course, when you're buying that property of worth 1 crore, in my example, you would buy that assessing your own financial situation, what are your earning ability. Bank will assess that, whether you're capable of paying that EMIs and so on and so forth. So, as such, I wouldn't say there is any legal loophole, because the lenders also will lend you only if there is sufficient collateral. Otherwise, they would not.
So you have been in DSP since 2004. So you have been through the 2008 crisis, the 2020 COVID crisis. So what's that one financial secret that has still kept DSP alive, which is not really taught in financial textbooks, but is discussed very publicly in boardrooms?
So let me probably split this into two, as a corporate and probably as an individual, because both are relevant. Let me answer it from an individual perspective. These crisis situations never come announced, right? So which means you should always plan for your resources. You should always have a certain portion of your funds set for such kind of situations, so that when this situation were to arrive and you believe that you want to lay your hand for that exigency fund, there is a certain set of fund that is available. On the corporate side, and it's probably not very specific to our company, but probably the world at large and corporates at large, they went through obviously some bit of cycle of downturn. Because business got impacted for that 1 or 2 year intermittently. And then, of course, things were kind of back. But that is where how prudently you conduct a company comes into play, right? How much are you over leveraged from a business point of view comes into play. So, again, a factor of how is risk part of your whole culture in terms of conduct is very important, and that is where most of the companies would have survived. There are some who couldn't survive because they were over leveraged, and because of which such a situation, there are no ways and means for them to come out, and they would have failed. So that's about.
If someone invested 1 lakh back then versus today, the world is definitely different. Is the buy and hold for 20 years advice actually a scam in 2026, when the world changes every 6 months?
The answer is no. While the world is changing, the basic philosophy doesn't change. In fact, you did ask, right? Even in the previous 20 years, there was a subprime crisis that happened in 2008. There was a COVID that happened, right? But after all of that also, there was money that was made by investors. So, fundamentally or principally speaking, if you're looking at a long-term tenure, the principles don't change, in the sense that even if you were to invest, keeping 20 years in mind, you will be able to compound your wealth at a decent rate of return. Of course, depending on the asset class that you're choosing. But when it comes to investing, what is important is time in the market and not timing the market. You get it, right? There is nobody who's an expert who can always, buy low and sell high when we talk in the context of equity. And since you are not, and you as a common person on the ground, we don't have that kind of wherewithal. It's always better to be in the market, have that systemic way of investing, and within that, keep a certain corpus which will always be required by you for the next 6 months, 1 year. Like, say, for example, higher studies, as you progress in your life, whether it's child's education and so on and so forth, so that even if the markets were to what you call gyrate, so to say, you have certain funds which you can always access to. The very inherent nature of market, it keep going up and down. But if you look at a 20-year history, it has not only been positive, it has been a double-digit positive, right? It is given higher than your fixed deposit returns and so on and so forth. So you have to just live through that volatility.
सर आप अपने जर्नी के बारे में कुछ शेयर करना चाहेंगे?
Certainly. As you rightly pointed, I have been with the firm for almost 21 years. Talking about my journey, right from my early days, I was very clear in my mind that I want to pursue the field of finance. So in school, I was very clear that I want to do commerce and then, of course, CA. And at that point in time, a lot of my relatives, my uncles, they used to say, why are you not taking science? Because I was a school topper. So I said, no, those days, the notion was science is only field available if you're good at studies. But I was very clear what I wanted to pursue. And then I came into the world of commerce, pursued my CA. And after that, I was again very clear that I want to pursue not the traditional audit profession, but the very operation and finance oriented jobs. That's how I started my career in JPMorgan for about 6 months. Then I was for about a year with Deutsche Bank. And then over the last 21 years, I am with DSP Mutual Fund.
Sir, if you could go back at the days of your JPMorgan to your first paycheck, what would you have done something different that would have maybe doubled your net worth right now?
Back in the days, the financial discipline was not much because which as much over a period of time, you would have inculcated. So the first thing, of course, I did is when I got my first paycheck, I gave it to my parents, and that was the proud moment for them. But from there on, yes, early investments at that point in time certainly would have helped create a lot of wealth as opposed to starting the journey later. So maybe that one thing that if I were to go back in time and change is had I started my investment journey early.
So we could play a rapid fire game. So you could just answer in maybe one word or one sentences.
Okay.
What percentage of salary should go to savings versus investments?
Early in your career, you should look at putting at least 40 to 50% in savings and investments.
Do you use any apps or tools for money management?
I use our DSP Mutual Fund app for my investments.
So, what's one underrated financial skill every college student should learn?
Control on expenses.
What's the best wealth advice you have ever heard, received, or given?
Investment first and expenses later.
What's the worst wealth advice you have ever heard, received, or given?
Obviously, I have not given, but not that I could remember of any worst investment advice that I've heard.
Thank you, Akil sir, for coming here and giving us your time. We'd really like to have you back again someday.
Absolutely, it's my pleasure. And like I said, my first podcast that I've ever given, and I'm extremely happy that this happened to be for SPCE for a group of college students, and I am hoping that you and your college would find it useful, beneficial, but I'm always available for anything and everything that you require. Happy to be part of this podcast.
It's not a game, it's a ranch town.